U.S. non-farm payrolls are coming out on Friday, June the 3rd at 8:30 a.m. Eastern Daylight Time and could have a significant impact on trading as we head into the weekend. The new markets have been leveling off, and people have been expecting that the Fed would likely come through with two interest rate hikes this year, one in June or July, and then one in December after the U.S. election. We saw today that the U.S. ADP payrolls came out. They were dead on expectations at 173,000. There was a 10,000 upward revision to last month. For this month on the non-farm, people are expecting 160,000 unchanged. I think we might get a similar 10,000 upward revision to the previous month. I'm actually thinking 150 though for the payrolls. I think we might see a little bit of an impact from the Verizon strike. There were 35,000 people were out on strike and could be considered as unemployed, even though they were off work and on the picket lines. But that's how these things work. So we could get the numbers a little distorted. I think it would take a number below 100,000 to knock the Fed off course, particularly because the street is expecting the unemployment rate to come in at 4.9%, below 5%, and approaching full employment. So the U.S. job market's still looking pretty strong overall. Keep an eye on average hourly earnings as well. Street is expecting an increase of 2.5%, which would indicate continued wage pressures and potential for rising inflation. That's also something that, if it comes in at or above, could keep the pressure on the Fed to raise rates sometime soon. Later on Friday, we get a speech from Fed Governor Brainerd. She doesn't talk too often, but she's probably the most dovish of the permanent voting governors. So keep an eye on what she has to say, because this would be her chance to refute or contradict all the other speakers that have been pushing towards an interest rate hike in the next couple of meetings. Next Monday, we also get Fed Chair Yellen, who gets to put in the last word before all the Fed members go quiet ahead of the June 15 meeting. How could this affect the market? Well, overall right now, it looks like the markets have priced in two interest rate hikes, certainly stocks and the U.S. dollar. So anything in and around expectations, even a little bit above expectations or a little below expectations, probably won't move the markets too much. Although keep an eye here on the S&P. As we can see, we've gone into a sideways channel between 2030 and about 2112. And hanging around 2011. So if we did get a really soft report, I think it would, as I said, below 100 to knock the Fed off course. We could see the markets come back off. Otherwise, I think we'll see things hold fairly steady. Similarly, if we look at the U.S. dollar index, it's leveled off in this 95 to 96 range. My feeling was back here up at 100. The market was pricing in 4 rate hikes. Here at 95, pricing in 2 rate hikes. At 92, 1 rate hike. And down at 90 would have been 0 rate hikes. So even though the bonds had gone to no rate hikes, the currency has always stayed in and around 1 to 2 hikes for this year, since coming down from 4, anticipation of 4 back over the course of March and April. So it looks like we could be in for some significant trading activity on Friday as markets react to the non-farm payrolls report.